Welcome to my channel, everyone. Thanks for tuning into this video. And I'm going to go over and recap and review some of the best plays this week that we could all take something out of, where we could all learn something from. And I'm also going to go over some of the plays that we took in the Discord room. And I'm going to break down a few of the trades that I personally took so you all can understand my thought process of, why I entered, what I saw forming in real time. Now, I do daily trade recaps like this on a daily basis on my Instagram. I also post trading tips and tricks. I will link my Instagram in the description below. Definitely worth a follow. Now, there's going to be some really good gems in this video, so make sure to stick around. And without further ado, let's break down the first trade. So the first trade I want to go over is the S&P 500. And for all you that have been following me, you know I chart ES, the future, and I trade SPY options around it just by looking at this chart. So this was interesting because it was very, very strong in the morning. We rallied inside supply, and I actually did not short the supply for a couple of reasons. So hindsight, it looks like we dropped off nicely, and congrats to everybody that did take this short. Personally, I stayed away just because the way the market has been trading. We've been getting very strong drops and very strong rallies, and there's no reason to step in front of the train when the market has such strong momentum and you're playing a reversal when they could just blow, right past you. So we were very strong inside the supply, and at this point right here where I could, see the chart, it looks like we're basing out, we're consolidating sideways inside supply. There was no confirmation really to short it yet. Very strong. There was no indication that sellers are present inside the supply zone. And then eventually, we started coming down, and we were holding the 1 hour supply zone. We were not selling off as much as I would like us to. So I just kind of avoided this, and eventually, we sold off. So hindsight, this looks great for the short side. And like I said, there were people that did take this short in the room. Personally stayed away because it was just a little too risky for me, and I wasn't comfortable with this trade. It's okay to miss trades. This was a nice short out of supply. A lot of people say this, like, oh, I missed this trade. It's fine. If it didn't set up the way, your strategy revolves around, then there's no reason to get the entry. It's okay to miss the trade. You don't have to hit every trade. There's always going to be another trade around the corner. So what I saw was us coming down into this 1 hour demand zone. Very, very strong level. Every time we come into this demand, we bounce. So I wanted price to hit the zone, and unfortunately we missed the zone by a couple of pennies. And I saw something very, very interesting, which I'm going to note here. So I look at the time and sales when I'm trading. On the ES, I set my sizes to at least 40 contracts because I want to see aggressive buying and selling at certain levels. And then I also have the ask and bid up, so I could see if it was hit on the ask or hit on the bid, showing aggressive buying or selling. So I had on the time and sales, price was coming down here to the 3426, 3430 area, and there was very, very strong buying. There was a lot of strong buyers on the level 2 hitting the ask. If you think about it, the people sitting with limit orders on the ask are sellers, and if you market order hit the bid, you're an aggressive buyer. And I saw 200 contracts coming in, 300 contracts coming in, 180 contracts coming in. Obviously, you can't see that now because the market is not trading, but there was very strong buying right before demand. This was at the same time, which also agrees with those tickets that came on the time and sales. Look at the volume on the bottom. A lot of people think continuation volume is, continuation of a trend, but high volume can also mean trend reversals. If you have strong volume coming in, but price is stagnant and no continuation, then that's pretty much absorption, and you basically have buyers absorbing all the orders down here from everybody that's selling. Now, if price continued to go down and volume kept increasing, then it's safe to say we had new sellers entering the market. But because price stalled out and volume was increasing, told me that, hey, maybe we have a strong buyer down here. We're a couple points away from demand, and I want to see how price is going to react. Same thing with the next candle, stronger volume, and it was not selling off. And I knew, we were 2 points away from demand. So at this point, I got pretty interested because the next candle was a green one. And at the time I saw this forming in real time, I posted this in the intraday commentary tab. I try to let everybody know exactly what I'm looking at as it's happening in real time. I was trying a long here at the 3428 mark with a stop below 3424. So it was about a 4-point risk, and my first target was VWAP as always. So I was risking 4 points to make a potential of 14 or 12ish points. So 3 to 1 I maintained, and that's small risk to me. I'm comfortable taking that trade, 100 times, and 80 of those are losers. My risk is so small that my winners are always going to outweigh those losers. So I saw this happening in real time. We missed demand, and this was forming new demand down here. I was comfortable. I took it long. And then this thing, I wrote it to VWAP. There was no reason to sell. A lot of people get panicky when the market's coming up. They look at their profit and loss. I can tell you for certain, please turn off your profit and loss when you're trading. If you trade based off your profit and loss, it's going to influence your decisions. It's going to make you panic. It's going to make you get greedy. And I'm telling you, you're going to see a dramatic change in your trading if you take off your P&L. So like I said, if you were watching your P&L, you probably would have freaked out a little bit. You're up, pretty fast. 10 minutes, you're up 10 points. On SPY options, you're probably up 40, 50 cents. And on 10 contracts, it's $500. So a lot of people see that and they panic. What I saw here was the same thing I saw down there. I saw heavy volume coming in at VWAP and price could not continue higher. In fact, this was the highest amount of volume on this. Let's see this right here. This was the highest amount of volume. Let me see if I could get it perfectly. That we had the whole day, and this was at VWAP while price was stalling out. Look at that volume bar. One more. There we go. And price was not moving higher. Look at the volume bar we had down here. That volume bar was a huge candle. It was like about an 8-point candle. This is the highest volume, and this was a 1.5 candle as we were stalling at VWAP. And so what I did was I scaled out half my position because we were reacting to VWAP. And 75% I scaled out at 3441, which was VWAP. Stalled out, and then what happens was we dropped pretty hard. I think there was Nancy Pelosi news that came out, and everybody was panicking. And personally, I'm not gonna sit here and not admit it. I saw a huge drop like that, and I sold the remaining 25% of my position. So that's the importance of scaling out. And I'm gonna make a scaled out video just to illustrate this concept. But whenever I have profits and whenever I hit my first target, I usually always will scale out because of unexpected drops like you have here. If you were in full position, trading options, pretty much your full position is going to be wiped out by this quick little drop, and you're going to lose all the gains you got from that rally. So thank God I scaled out 75% at VWAP, and then this thing started dropping. Then the rest of the day, nothing really exciting. We rallied, and then there was stimulus news. So what's interesting here is that if I remove this 1 hour supply zone, we had stimulus news drop and price rallied pretty hard. And look where we rallied right into. Rallied right into a supply zone up here from this drop up here. So, price will always precede news. When news drops, you could look for a rally into supply. If there's no more buying up here, look at the heavy volume. I love volume spikes. Like I said, volume spikes are a big indicator to where price is heading. Right into supply, and then this thing rejected. And then nothing else for the rest of the day. Next trade I want to go over is on Zoom, and this has been an absolute beast as of lately. I started adding this to my permanent watch list on a daily basis. Just works very, very well with supply and demand zones. It gives us really, really good opportunities, and it yields very, very high percentages trading the option contracts. So definitely pretty much with the current market right now, it's one of my favorite stocks to trade besides the S&P 500. But I just want to break this couple trades down the past 2 days. So this is October 21st, again on Wednesday, and we had a very strong opening drive on Zoom, as you could see from this 14-point candle, the first 5 minutes. Then the next candle was that balancing candle that I always talk about, and it was setting up for my favorite scalping strategy, my 5-minute strategy, where we basically balance out and we wait for price to break above the balance out period, and we take it long to our first target. In this case, supply was about 3 points away, so there wasn't that much meat on the bone. No crazy profit target above. We had supply right overhead, and I just wanted to get in and out pretty quickly with my favorite strategy. Then the next candle invalidated that strategy. It has to happen on the first, second, and third candle after the first rally. If you have a mixed candle like this where we basically are balancing out again, I don't take the trade on the fourth one. Fortunately, it would have worked, but it just is against my rules, and anything that goes against my rules, I do not take as a trade. I don't buy it because I think it's going to go up. I don't sell it because I think it's going to go down. I stick to my strategy because I know it works, and that's it. You deviate away from that, you're not going to have any long-term success in the markets. I can tell you that right now. But then the next candle hit the supply perfectly, and then we stalled out. Now we tagged supply perfectly, pretty much, by 20, 30 cents perfectly. Anywhere in this area is safe to take it short now. As soon as we start consolidating, 548, 550 area, 551 area, take it short. You're risking literally to the high of day, which is 551.30 or high 551.50. So you're risking pretty much $1.50. And if this thing starts breaking below VWAP and coming down to our next demand zone, it could be a very small risk to a very high reward type of trade. So as long as your target is at least 3-to-1 compared to your risk, it's a good trade. So this thing from this 1 hour supply zone sold off. No reason to take profits anywhere. Our next demand zone was this daily at 518. So about a 40 point or like 30 point buffer from supply to demand. And on the way down, we started forming new supply, sold off pretty hard, and then eventually hit daily supply. And then by end of the day, we closed inside daily demand. Now going into the next day, as long as we gap and hold above the daily demand zone at 518.75, I'm going to play to the bull side. So fast forward to the next day. Keep in mind of the 1 hour supply zone that formed yesterday. We sold off pretty hard. Nothing crazy. We missed supply by about 50 cents, but sold off. And volume was coming in, and I like this trade to the long side just because of the sell-off. The levels were in the pre-market plan in the Discord room. Let's see. So this was on Thursday. I said I like how ZM broke low a day in demand, and it's starting to curl upward. And then the next day, let's go over here. Zoom was rallying pretty hard, and I wanted to take this long as soon as I saw new demand forming at the 516, 515 mark. Broke low a day on the next candle because you could see this huge wick. As soon as we broke low a day, you're not going to see this from a candlestick chart. So a lot of people, you have to be aware of this as it's happening in real time. You're not going to see certain price action from a chart after the fact. Broke low a day. Buyers stepped in immediately, aggressively. As soon as we started selling off, immediately reclaimed it, stepped in and took price higher. I took this long, and my first target was the 1 hour supply zone. Now, unfortunately, I got a little greedy with this play, and I'm not afraid to admit it. Very strong, very high volume inside supply, and it was not, selling off at all. In fact, the next candle, we broke above the supply zone, hit 530, and at one point I was up $4,500 at one point from my entry down here. Unfortunately, did not sell. I did not scale out, and the stock started coming down. And as soon as it broke down out of the supply zone and did not held VWAP, I sold for a smaller gain compared to the $5,000 or $4,500 winner I had up here. I only sold for about $500 profit. So this was nothing crazy. It was a 100% return on my investment at the point we were inside supply. In fact, it was a little higher at the 530 mark. But unfortunately got a little greedy with this one. It worked perfectly according to plan, but like I said, I deviated away from my strategy and I paid a little price for it. Still a good trade. Not going to complain about making money. Just my execution was not the best. I know a lot of traders in the Discord took this and also made money on it, over 100%. Here we have Apple, and this was straight from the pre-market plan. I wanted to get long at daily demand if it gave us another entry. Here we have daily demand on October 20th, and there's a good breakdown with this. So the entry to take long was once we came out of demand and we started having this balance out, consolidation period right here. That's a safe entry to get long right here with your stop below low a day, or you could wait for it to start curling up and put your stop below this little low right here. So that was when we came out of daily demand we were watching. If you missed this entry, here is another entry you could get in. You could get one, we come back down and retest the zone. Anywhere in this area, you can wait for when it comes down, starts coming up. And a more conservative stop loss would be below this low at 115.93. And a more risky stop loss is going to be below low a day. But obviously, you're going to give the trade a little more room to breathe. And if you do so, you can maybe make your position size a little less. Whereas if you have a tight stop loss, you really can't go, you have to go with higher position sizes. So then this thing bounced pretty perfectly out of daily demand and rallied right into the supply zone at 118.71. Personally, wouldn't have taken this thing short just because of how it reacted at daily demand, a very strong, larger time frame zone, and this thing worked pretty perfectly according to plan. Okay, the last trade I want to go over is Boeing. Now, this again was straight from the pre-market plan, and the point with this is just that these levels are drawn before price gets there. You know, they're not drawn after the fact. We come up with a plan, we stick to it, and we see how price reacts to the levels. So I said Boeing, we have 164.37, which was 3-hour demand. I want to be a buyer above this level. Price came into this demand zone, and a good valid entry is literally anywhere where we stall out here. So price sells off into demand, and look, we have a hard time moving down lower. Volume's kind of stagnant, but we're having a hard time moving lower. A little more risky, but not risky type of position. What I mean by this is that you're not waiting for confirmation, but because you're not waiting, your stop loss is really small. Would be anywhere in this area, you know, right up here. Anywhere where price is stalling out, and you could get it and put your stop loss right below this low. So you're risking, if you're in at, you know, 164.30, 164.20, you're risking 10-20 cents. So it's a risky play because you're getting in without confirmation, but it's really not risky because your risk is so small. Or you can wait for the market to start coming up and start coming out of this consolidation period, which would be, you know, anywhere in this area right here, we'll break above that high, anywhere in this area, and then put your stop loss below the low. Now, this is less risky because you're waiting for the market to come out with confirmation, but your risk is going to be a little more because now you're waiting for the market to come up, and now your risk is all the way down here. Both are good trades. You know, both are valid entries, but it's just something to note and journal when you're going over some potential plays. And then this thing rallied right into that 2-hour supply zone at 169 that we rejected pretty perfectly. Next day, the same thing. We rejected the supply zone. And the day before that, earlier in the week on the 20th, this 2-hour supply zone at 169 rejected. Awesome. You know, so these levels, as long as they're not broken above or below, they're still valid and they still give us nice reactions to take long or short. So I hope this video helped. I didn't want to rant for too long. I know it's a 17-minute video, but I hope you all learned something. If you did, drop a like, comment, and subscribe to my channel. Also follow me on Instagram. Thank you.